Good morning, ladies and gentlemen. A very warm welcome to day two of the 20th edition of the Marketing Conclave, organized by the Internet and Mobile Association of India, powered by Google. Yesterday, we explored how artificial intelligence is reshaping the world of marketing, media, customer experience, search, creativity, and consumer engagement through thought-provoking keynotes, engaging panel discussions, fire chats, and interactive conversations. This morning began with our exclusive power breakfast for women leaders, bringing together accomplished women leaders from across industries for inspiring conversation on leadership, innovation, and the future of marketing. As day two unfolds, we encourage you to make the most of the experiences curated across the venue. Join the Google Masterclass, explore our case study sessions, closed-door roundtables, discussions, and continue networking with peers, partners, and exhibitors. Now, before we proceed with the proceedings for the day, I would like to take a moment to acknowledge all our partners for their continued trust, collaboration, and commitment to strengthening India's marketing ecosystem. The 20th edition of the Marketing Conclave is powered by Google. Our gold partners, Affinity and Origin 8. Silver partners, mFilter.it, DoubleTick, and Vonage. Roundtable partners, Truecaller, SEMrush, and Exotel. Communication partners, Hello.ai. Bronze partner, LS Digital, Connect Network, Consumer.ai, PubLive, BC, Webwise, and Shemaru. We would also like to extend our sincere thanks to our supporters for their valuable association with the 20th edition of the Marketing Conclave. And these are AdGully, AdTech Today, ET Times, StartupNews.fyi, and Bloggers Alliance. Ladies and gentlemen, may I request you to please give a warm round of applause to all our supporters, partners, and exhibitors. Now, without further delay, may we start with the first discussion for the day. And the topic is building trust at scale in the digital age. And may I request you to please welcome our guests with a warm round of applause. May I call upon Mr. Rohit Mahajan, Founder and Chief Executive Officer, Plutos One. And may we call upon the panelist, Mr. Aviral Chandra, President Marketing, Shriram General Insurance. Hanisha Vadlamani, Chief Brand Officer and Head Corporate Communications and Corporate Social Responsibility, KFintech. And Mr. Rahul Sethi, Chief Marketing Officer, CAMS. Thank you. Please give them a big round of applause.
Good morning, everyone. Building trust at a scale in digital age. Trust. What is trust? We are, as a customer, now everything we are doing on a digital, whether it's opening an account, investments, buying insurance, everything on a technology, on just a click of mouse. But as a customer, do we actually feel trust is important? And how trust is going to be the future in this digital age? So now we have an amazing panelist over here. So I'll start with Aviral. Aviral is from Shriram General Insurance. So insurance, today we buy insurance today, but we need to use much later if we need to use. So how the trust is important in the insurance sector. So hi Aviral, why trust is important or the technology is important? So that's my first question to start with you.
Thanks, Rohit. Great question. What I suggest is trust is of paramount importance in insurance because if you understand, in insurance, be it life, be it non-life, the companies are selling claims, right? And claims is a promise of service that we are going to be there for you at the time of claims. So a piece of paper which is, there lying in your cupboard or your car is of no use till the time a claim hits you. And that same piece of paper, you hunt all the wardrobes, the car dashboard, dickies, purses when a claims hits, right? So in terms of the service levels, what we look at, when we connect with a customer starting from sales, all dialogues start with trust. You know, it's not about selling a policy. Now, this was from 20 years back when I started a career as a management trainee in Tata AG. It was selling a policy. You beach ke aa jao, everything will be sorted out. But now it's more a conversation, be it a retail customer, be it a corporate customer, and the products are customized as per the requirement. For example, Rohit, or could be, Harshita, or could be, Rahul. The requirements should be totally different, right? So I have to custom made a policy, be, for them as per the requirement. And in every conversation, trust is going to be there. They will measure my trust. How is Aviral equipped? Is he qualified? Is he from an institute where, of repute? Does he have an insurance background? Has he worked in an insurance company? They will, check everything, see my LinkedIn, LinkedIn profile, social profile, and then probably build a conversation. And then this could be for 50,000, 1 lakh rupee of premium. And then when it moves to commercial lines, this runs in crores. So 50 crores, somebody is dishing out from the pocket. He will have to, do a proper due diligence for a person. So I think we sell trust, and trust is not there only 1 year that I chipkaw a policy and I move on and I go. The companies look at retention, persistency. How can I take the entire portfolio for Rohit, for Harshita, for Rahul, and their car, their home, her factory, her GPA, GMC, so that a holistic approach is what the companies look at. And that's the essence of insurance. And I believe the trust remains of paramount importance. Beat every step, starting from pre-sales to post-sales, which is claims.
That's what important is, insurance, we always have trust issues with, insurance. Okay, I'm buying insurance for today, but tomorrow what will happen if I have to go for a claim? So, Hanisha, Hanisha. So, KFintech powers the millions of investors' journey. So you don't deal directly with the as a customer. So how do you, a trust as a marketer also, is important for you as a company?
Thanks, Rohit, and thank you everyone for being here today. Great question, because dealing with the B2B sector is not always easy when it comes to marketing. So in my personal opinion and my professional experience, what I've noticed is B2B marketing is not just one level. It has two different levels. One is institutional marketing. You reach out to your institutional investors, which are the banks or other fiduciaries that are there in the market. And then you have the retail investor who you reach out to in a different level. So here we work at the intersection of asset management companies, we have distributors, we have retail investors, we work with the regulatories. So all these entities come together, and when we can service these the stakeholders of the ecosystem properly, and we ensure that there is zero downtime. So we aim to have a zero downtime, but sometimes it ends up at being like 99.99%, which is also a very great achievement in terms of the millions of transactions that we process on a regular basis. So if we are able to service all the asset management companies and all the stakeholders who are involved with us, then nobody will have to, think, okay, I am investing in a mutual fund, or I'm, redeeming certain fund, or I'm making a mandate change. Nobody will think about KFintech. They will think about how seamlessly their process has been processed. So when your systems are working without any issues and you're delivering seamless results to your investors, I think that is where half your win is. So being the backbone and the support system to all these asset management companies and the wealth management companies, portfolio management companies. So all the entities that we work with, making sure that we provide them a seamless operating system for all the operations to go through very efficiently. I think that is where our real success lies in.
Correct. Very difficult for a B2B company, because you don't directly deal with the customers, but your customers at a B2B level are different. They only give you business when there is a trust, unless until nobody is. CAMS, Rahul. So, trust me, when I used to get this mail from CAMS, for your mutual fund portfolio and all, so I'll say, CAMS is, what I know about is, it is paperless to digital of a mutual fund. My mutual funds are actually managed by CAMS, correct? So,
Yeah.
so now I'm investing somewhere. So as a, a retail investor, so how CAMS is making sure that the trust of my mutual funds and the way my paper was, earlier I used to have a hard copy of my, the mutual funds, every shares, and what is for you as a CAM the trust is?
Yeah. So, firstly, welcome all the audience here, and good to be here for this panel. And so I'll give you a quick background about CAMS, right? So basically, the entire mutual fund industry is sitting here on the panel. So she's from KFin. Together, between both of us, we manage the entire backend for mutual funds, right? Mutual fund industry in India, which comprises close to about 85 trillion rupees of corpus, which is managed between the two of us. Now, mutual fund sahi hai, right? हम सबने वो सुना है mutual fund sahi hai, right? So to live up to that promise, right? And when we talk about investments or when we talk about insurance, I think both of them are for the future, right? You're planning your retirement or you're planning your, risk cover. It's for the future. It's for the unforeseen, for the insurance, and for the investments, you're planning your future, right? So trust is paramount. And also with the tagline mutual fund sahi hai, it gives us a lot of responsibility to live up to that promise, right? So to living up to that promise today, म्यूचुअल फंड सही है तो आपको दिखता है सामने, बट बैक एंड पे जो द प्रोसेस विच गोज अराउंड एट द बैक एंड टू एंश्योर म्यूचुअल फंड सही है रिक्वायर्स लॉट ऑफ ऑर्केस्ट्रेशन, राइट? सो यू मेंशन अबाउट पेपर मूविंग टू डिजिटल. I think digital transformation of the entire process, and I think it's still about 7-8% which happens through paper, but predominantly now it is digital. The entire transformation to digital has given more transparency and I would say also scalability to the process, which we are able to live up to the expectation of the new age consumer or new age investor today. Right, today when we look at the growth that we've seen in the mutual fund sector, it has actually grown 3x in the last 6 years. Post-COVID, we've seen a 3x growth. Today we process, on a peak day, I am processing 1 crore transactions, right? In a day, 1 crore transactions in a day is what we are processing. So when you talk about trust in the digital financial ecosystem, it starts with experience, right? It clearly starts with experience. Am I able to provide a seamless experience, what Hanisha also pointed out? Am I able to provide that seamless experience to the end user, right? That is number one. Second, it is about transparency. And digital is all about transparency. Today, everything is on the internet. You want to search for the performance of a particular fund before you want to invest. You want to look at, reviews on a particular fund. You want to look at, fin influencers talking about funds or, certain investment thesis suits your requirement, doesn't suit your requirement. So it, goes into, I would say, transparency as the second pillar. And third, more importantly, recourse. If anything goes wrong, right? Do I have a recourse? Again, getting everything online, making it so very transparent, the dispute resolution process, That provides trust in the medium, and that is, what is now driving hordes and hordes of people to this medium. And the growth that we are seeing is purely, I would say, based on trust.
Awesome. So we are talking about trust. Let's define what is trust. Hanisha, you want to speak about what is trust as a a financial technology? What is a trust? And don't look at as a as a KFintech perspective. You should talk about what is a trust as a fintech industry. How you define that trust is how it is important.
Okay, that's a tricky and a very, very deep question, Rohit. So I'll give you my perspective and not, considering that I'm from the fintech industry or all of that. So there are two industries which I believe once the trust is lost, is forever lost. One is the medical industry and the second is financial industry. Because people put in their years of hard work into, making some savings and providing for their future generations. And if that is being affected, I think, like how they say, trust is earned in drops and lost in buckets. So once the trust is lost, it's very difficult to regain it. So as a marketeer, how do I ensure that I gain the trust of my investors or my target audience? So speaking purely from a marketing perspective, I think being transparent, like Rahul said, is really important. Today we look at compliance. So being in a very regulated industry, be it insurance or be it in the financial ecosystem, we are very much thoroughly controlled and regulated by the regulators from a compliance standpoint. So how do I make this? So I personally believe that these regulations should not be considered as some burden, but it is an actual incentive for the investors, for the people who are trusting us. So making it more transparent. So we have this DPDP and GDPR laws right now. So making it open, you give a choice for a person, an investor, your audience, to ensure that they have an exit. You don't want to receive a certain email, you don't want to receive a certain communication. The end investor should be given the opportunity and the freedom to choose the option out of it. I think that is where you gain the actual trust, making sure that they have the freedom to choose. That is really important, and that is how you can actually build trust in this digital age.
Amazing, So Aviral, insurance, and I think insurance and trust. So things have changed in last 5 years. Technology is changing and moving. How do you see a trust as with the technology in insurance sector? Is it going hand by hand, or technology is moving very fast? What's your take on that?
So what I feel is there are multiple technologies which are coming, and change is evident in the financial services. If you talk about AI, ML, blockchain, IoT, everything is there. Gen I is ruling everybody. Now, and Chat GPT is Google, Gemini, everything is for Gen Z, millennials. So for us to maintain and catch up with the pace of this changing environment as insurance industry, it's important that we use AI, ML, blockchain, IoT as a tool to facilitate the business, speed up the business, but not compromise on the business. So whatever is sacrosanct with us, that, the signatures are mandatory, IID has a compliance, IID is a regulatory body for insurance. The compliance, the integrity has to be managed. With technology use, the customer can have a wow experience, a customer delight, and the pace can be reduced. So if you look at India, there are almost around 51 crores Gen Zs and millennials, and all the companies are targeting Gen Zs and millennials because they are the cash cows. But talk about, I'm not Gen Z, so in my team, I have 2-3 Gen Zs because they tell us what we are missing out as millennials. So you look at a Gen Z for an insurance purchase cycle, they will buy a car policy at 11:55 in the midnight, because 12 o'clock in the night, the policy is expiring. And then they will go to XYZ, ABC, and then they will take a decision. The flight is taking off, and a Gen Z will take a policy when the flight has already taken off and left the Indian shore. And as per the rule of insurance, the moment you cross Indian borders, you are not covered for a flight or for travel insurance. So that's the psychology of a Gen Z put together. Now, when we look at, so it's a marriage between technology with compliance and trust overall. So pace, speed, everything technology can help, but the core remains for us is trust and customers. And depending on the baby boomers, depending on Gen Zs, millennials, depending on TG, the targeting or the pitching on the marketing piece changes. The strategy changes on the different TGs. So that's where I think we manage. But technology is of paramount importance. But then somebody, with technology, a human intervention has to be there. A human mind needs to sit on top of technology, otherwise you will go bonkers.
Gen Z is the favorite word these days. So suddenly we have all the examples around Gen Zs. While we were discussing earlier, the topic was Gen Zs. So
if you look at, there are 1/3 of Indian population is Gen Zs. And these are like, so I have learned, I'll tell you, 1.5 years back, my wife was away in Calcutta, my daughter was away. And I had a crucial problem at home. I had to leave for office, the maid didn't turn up. And a day back, we had recruited some 60, people from different management institutes, and somebody from IIM Lucknow had suggested a girl that I have got 290 apps. And I said, what do you do? That day, I learnt about InDrive. I was not aware of that. I was aware of Google, Uber, Ola, and Cabby. But InDrive was new to me. Snapit was told, and then I immediately booked it for whatever amount. Money was not important, but that idea, and somebody can come now in 15 minutes time and help you, and it's a major fiasco. Otherwise, I have a dog at home, somebody has to be there, clean up the mess, and I have to leave for office. So I think so that's where the Gen Z is super, super important, at least to me.
they are teaching us on a daily basis. Rahul, an interesting question for you. What's the biggest misconception organization have about digital trust? So as an organization, you see a lot of organization around. While I was talking to you, you have such an amazing experience. Where do you think organization are missing?
So I think, so I'll take it from where she left. So trust. Trust is clearly about living up to the promise, right? So what you promise, you'll have to live up to it. Now, in our case, right, and as I mentioned in my earlier point, that it starts with the time when the investor initiates a contact with you, right? From the first contact till the final contact, right? You have to ensure you are able to deliver a seamless experience. It starts with an experience, right? So, and I will also try and draw a parallel to what companies beyond fintech have done to build trust. Maybe I'll take 2 minutes. We can start with e-commerce, right? So e-commerce 20 years back was a very new concept, right? When Amazon came in, eBay was in India. And people buying online 20 years back, purchasing a mobile phone online, there were frauds. Obviously, there were frauds. There were bad experiences. And specifically for American companies where they haven't seen certain things they take it for granted, right? Whether it is paying check, right? In India, you pay in check. The recipient would want to encash the check before he'll deliver the product to you. In US, once you pay in check, it's as good as payment done. You are from payment industry, you understand that, right? So when Amazon was setting up in India 20 years back, they had to build the entire ecosystem to provide the experience they wanted to provide the consumers, right? So they had to build their own logistics. Because the logistics, there were a lot of gaps in the last mile connectivity. बीच में आपको packet में से t-shirt निकल गया, you ordered 3 t-shirts, you get 2, all those things were. So they built their own logistics to get a control on that. In terms of the supply, they created their own warehousing because they again wanted to control the quality of material, right? They're a marketplace. Right. So sellers are directly dispatching, you don't know what you get. You order M, you get L, you order yellow, you get pink, right? So they wanted their own warehousing, so they built the system from warehousing. Payments, again, was weak that time, so they built their own payment COD mechanism, right? That time people wanted to first order on COD, build confidence, then go and order on. So basically, in a nutshell, they created the entire supply chain to provide trust. What we've done in CAMS is very similar, right? So I started as an RTA. RTA is nothing but keeping the records when you make a purchase on a mutual fund, right? What you're buying, your units, your NAV, when you redeem, I'm able to, redeem the units that I hold those units with me. But the experience doesn't start, with buying. It starts with onboarding, right? The KYC process. So we had to create the entire ecosystem, right? A seamless ecosystem where a new investor can come, register, 10 minutes, KYC is done, he can make his purchase and provide a seamless payment mechanism where he or she can set up an auto pay, SIP, and all those things. So the entire system was seamless, the entire transparency was created, and a redressal mechanism. Today, if you look at mutual fund industry, we have, I think, maybe the lowest PPM, error PPM, in the country, or maybe possibly in the world, right? In terms of the errors, the way the entire system has been.
A lot of people are moving into mutual funds. That's a
Yes,
trust.
and
That's a trust, basically.
It's the trust, and secondly, when you look at, mutual fund today is the lowest common denominator in an investment. If anybody wants to start investing, mutual fund and SIP is the lowest. That's where you start, right? That's where a new investor starts, and then he graduates. So the first step has to be very stable, otherwise it will, screw up your entire experience. So there, we carry that burden on our shoulders to ensure the first step into the investment world for any investor is taken care of in a seamless fashion with full transparency, with zero errors, and full trust, so that we win the trust at the first step and graduate the user to build a good corpus.
I think the trust is major. Technology will follow, correct?
Yes, yes.
So
I think technology has played a good enabler in terms of building this trust for us.
Correct. So, Hanisha, so my favorite topic, and that's called AI. So life is changing. Gen Zs are, making sure that we have a lot of apps and a lot of service. How, Hanisha, you treat AI and technology and trust because as a marketer, how AI is going to change your life, and how technology and trust, must be sitting in the center of your brain these days, correct?
Absolutely. It's like, you wake up with a good morning text and it is AI.
Correct.
So, great question, and I will pick up from where Rahul left. I think we are, just
You're
passing on the
conversing.
patent to each other here. Very much so.
So that's
For the first time, thank you, IAMI, for teaming both of us up together.
We are meeting for the first time.
Yeah.
In person.
oh, wonderful.
I'm in the industry for 2 years. She's been there for 6 years.
So I was
But
hearing.
in person, we've been connecting with each other.
Correct. When I was sitting with you, I was hearing so much of interesting knowledge sharing. I said, "What is amazing?" That's it.
So I'll come back to your question, Rohit. So where, Rahul was mentioning that the journey of an investor, you're talking about the Gen Zs, or, even I haven't invested in a mutual fund until I joined KFintech, guilty as charged. But, now that you start investing, you understand the process, how tedious it is when it, as it were 5 years ago, before COVID. Technology has taken the center seat. And here, for example, 5 years ago, not 5 years ago, even 1 year ago, if you would have started a new SIP, what happens is the process is you choose the fund and you give your bank mandate, your KYC happens. So in the back end, the bank checks your KYC, validates it, and there's a penny drop. So a lot of these actions happen in the back end. But for the investor, like you said, Gen Z wants it quick. Not just Gen Z, everybody likes to have everything convenient and quick process. So AI, I'm not using it as a marketeer, but I'm using it in my operations. How am I integrating AI into operations? So we have used the AI platforms using Claude and multiple other coding aspects, We have developed a process which we very recently tried, tested, pilot phase is done, and now all our clients are using it. So earlier, this SIP, new SIP mandate would have taken 15 days, minimum of a 15 days for a new SIP to begin. So here what is happening? You would think, Arey, what is the big problem? It's okay, I would wait. No. For an AMC, their money is being stuck. So they don't know how they will use this money. It is not just 10 rupees, 5 rupees, or even thousands of rupees. It's thousands of crores that we're talking about. So they don't have the visibility to the money that you're investing. They don't know when it is going to get into their kitty for them to reinvest. And for the investor, he's losing interest. And the asset management companies, they're losing a customer here. So there are drops in this process. So what we did is, we have brought down this process to a very quick turnaround of 1 day.
Wow.
From almost a minimum of 2 weeks to 1 day. So your bank mandate, everything is automatically tested. So I'll tell you where we have, made it more
Correct. What changed?
optimized. So this optimization has come wherein we have removed the manual operations wherein you check the bank mandates, you check the signature verification. All these have been automated by the AI.
Wow.
So the workflows, the operations, everything being automated, it is saving you time. I think providing convenience with the use of AI, I'm not using AI to create a marketing campaign.
Okay.
For me, I personally, I don't call myself a marketeer, but I would refer to myself as a brand custodian. So for my brand to shine through, or to gain that trust that we are talking about, I would say the operations being seamless is the ultimate branding that a brand can get. If people come and tell you that, oh, that process is amazing, it's seamless, that's your branding right there, that's your marketing right there. You don't need to run multiple campaigns on platforms.
Correct. Rahul, you want to speak around something around AI, how you're using AI in your ecosystem?
So we basically in operations, mainly in operations, in marketing we do, so in fact my team uses a lot of AI. They're sitting here on the...
Are they making proposal through AI? No.
They would use AI for agency briefing and all those things. I try and keep away from it because after a point of time, it gets very routine, right? You don't get new fresh ideas. It's very difficult to generate new ideas from it. In fact, that's been my experience overall, right? The originality lacks. In operations, yes, right? So as I mentioned to you that we've been able to reduce the physical forms. So wherever we are getting physical forms today, right? At least one part of the maker-checker process, we have moved to AI. And that has helped us improve our efficiency, right? Also for customer experience, the turnaround time, as she was mentioning, all those things. So there we've been, using AI to a very large extent. Otherwise, in marketing, no. In customer service, definitely no, right? When a customer is calling at a call center, they don't want to talk to an agent, right? And we understand, the severity of an issue because, it's an investment. You can't have a bot chatting up with a customer. And we have real people talking, but yeah. So that has been, so we've been gradual and slow. We've been very calibrated in our approach in terms of introducing AI.
So insurance. So insurance is very key. Now, AIs are settling the claims. It is very difficult. If I've applied for my insurance, suddenly AI deciding that this claim needs to be settled or not. So how do you see, AI and as a trust? Because I'll say I'll put up a form and everything, and AI says, no, this is fraud or something. So how do you build trust with the AI as a, empathy, creating empathy around it?
Okay. So for us, so we are in a business of trust. Insurance is nothing but a promise of service that we are going to be there for you at the time of claims. Now, if, the AI bot decides a claim of maybe Rohit comes in and 25,000 rupees he has claimed, the documents are fudged or there's a fraud element involved, it will cut it through. right? It will, because in AI, there's OCR, there's ML, blockchain, so we know where signatures are fudged, where, so with that, you can check the entire piece. So decisioning is done by AI, but it's not sacrosanct. It can be overrated. If you look at probably companies like Lemonade in US, the time of claims, the vehicle of a person has banged another vehicle, and depending on the person makes a call to the call center, now depending on the pitch, volume, the mode of that person's voice, the AI will take a judgment whether this person is genuine or not. Right, so because if you're in a state of panic, your BP will be high, you'll be, at the top of your voice, you'll be shouting and said, I would want someone to assist me now. Otherwise,
Correct,
no
correct.
point. So that's where I feel, and if you look at us, we use AI in multiple segments. We use AI in underwriting. We use AI in fraud management because in India, there's good business. The industry is 3,60,000 crores, but for insurance, the fraud element is supremely high. So people, what they do, the dead bodies are put across, on the highway, and the TP liability comes in across. So the rackets have to be found out. So coming back to your question now, AI is important, is a tool, is an enabler for us to settle claims, for underwriting decisions. But human intervention or a human head sits on top of that is decision making, because not what AI decides is sacrosanct. There is a human judgment, which is super important, and deviations are always taken, because whatever, his documents could be proper, but maybe somewhere he has put in something where dots and something, and it feels that, it's in bank signatures, because everything is backtracked from, the feeds are taken, through your Vahan portal or through your other Aadhaar portals, and everything can be checked. In that, if we figure out, yes, somebody takes a call that are at a level which is a manager or underwriting manager takes a call, okay, now Rohit is genuine, it's genuine, as simple as that. So for insurance, genuine claims have to be paid, come what may. With the help of AI, the TAT improves. The turnaround time could be 7 days. Now with AI, immediately you file a claim, you give the documents, and next day your money comes in across. It could be now 1 day, could be in minutes as well.
Wow. So we just have 5 minutes left. So any questions here?
Hi, I'm Dhwani. I have a very basic question, honestly. Like I've been listening to every one of you, but maybe for CAMS and KFin, I guess it's a little evident for me. But in insurance, for example, Aviral, if you could shine some light on how do you measure trust? In the sense, like, what are the telltale signs that the customers have faith in you? I mean, I'm sure it's renewals or whatever, the portfolio of maybe the products, but what does Shriram General Insurance, for example, what do you do particularly to measure?
So what we do is, like, the trust starts from the phase 1, when we interact with the customer the first time, fetching the information, whatever the customer is asking for, and giving it back to him as per what the requirement is, tailor-making a solution, customizing it as per the requirement what they have. Then the true test of what trust comes in at the time of claims, because he has bought a policy, paid XYZ amount for settlement of claims. There, the true test happens. And there, if you are able to settle the claims and tell the customer that I'm paying you 50 crores of the claim, you have paid the premium for 100 crores. Why? Because A, B, C, D, X, Y, Z reasons. And you're able to convince him. That's where the test happens. And with that, the customer, again, a test comes in again with the renewals. The customer says, okay, Aviral, I would want to renew policy with Shriram General or not, depending on the experience he has over the 1 year time. how long before the renewal letter went into him? 45 days, 30 days. Did anybody chase him? Did anybody chase him like a police or a hawk that, for 50 calls in a day and say, renew policy? No, that's a irritant. It's a moment of truth which is pathetic. So you build a trust starting from the first interaction till claims, and then with that, the customer renews a policy. And with that, one policy, he gives another policy. Okay, Aviral, I have a plant in Silvassa. You can please underwrite that as well. And that's where the cycle starts. And then he refers Rohit, he refers Hanisha, refers Rahul again. And that's where I build a cycle of trust across. So starting from first step till last, and it's like a evolving process, for an insurance company. And that's where we use a lot of AI, a lot of manual intervention across overall.
So, Rahul,
I just wanted to add, right, from insurance as a consumer, right, when I'm trying to evaluate insurance organization for any of my insurance needs, so I would look at claims ratio. I would clearly look at claims ratio. What is your claim, specifically in medical, right? So if your claim ratio is poor, either your due diligence is not up to mark when you are inducting, new insurees, right? When you are taking my money for premium, either your fine prints are not, they're very fine for me to understand, and then you are rejecting my claim, or you are too risk averse, you're not trying to. So basically, that is what I would look at. And maybe as an insurer, persistence ratio could be a good barometer for you to understand how your persistence ratio is, to figure out whether your customers are coming back or not.
Yeah, so I think persistency and renewal is what we said. It's important. But when you look at the claim ratio, so I don't know the face value that is Rahul, Hanisha, and Rohit, and all of you are good, bad, or ugly. Depending on the, once we interact, once we understand each other better, because insurance is no more policy selling, it's a dialogue, it's a conversation. Each and every step, I'm connecting with, with you, understanding you. There, if there's an element of fraud comes in, because see, I'll tell you, at the face value, I'm being taught by mom and dad that everybody is good. But that's not exactly the practical world. There are fraudsters who are just waiting for you to do a mistake and your money goes away. So if you look at, for example, UP, if you go, there's a racket which is running that the dead bodies are taken from hospitals, and the lawyer goes to police stations and gives 1,000 rupees each in the police station to inspector for each details of that body, and they are thrown under truck, and the claim is taken care of. So coming to a question on claim ratios are not a barometer for insurance company, depending on the business they are in. So if I may have written a bad business because I was naive, I was innocent, I was new, I have learned through a mistake because I thought everybody is good. But it's a bad, big world, and people have taken me for a ride. So I've learned from mistakes and probably look at ideas to improvise the loss ratio from maybe 60% to maybe 35%, and ensure that only good business comes in across. But with good ducklings, you have some ugly ones as well. So that's a part of business, and we all manage across.
Thank you. I think the time is up. So
I had
my
one last question.
Yes,
Sorry.
please.
Can I just take one question? We all talking about customers who are already there. You talk about bringing in AI. I just wanted to know that now when a user journey starts from search, and we are talking in Marketing Conclave, where they search something on Google and they say, okay, yeah, this is a good insurance policy, or this is a good SIP plan, and it's from some third-party site, and it's obviously some wrong information, but Google decided it was authority and they ranked it. How do you guys vet your information? Like, because like you mentioned, Hanisha, that you're the brand custodian and not a marketeer. So how do you guys monitor that information, vet it, and make sure it's accurate? Your customers don't lose trust when they read something. They might not remember it was from third-party site. They'll just see your brand name and they say, okay, KFintech promised this, but it's not correct.
I'll add to this, how social media is affecting this, the trust as a marketer.
Social media, I think it's helping us, and it is also making people lose trust very easily. I think because of the accessibility that has been, the penetration of social media into everyday's life. And along with that, how do we actually make sure that, our brand is being safeguarded from all these kinds of malicious or, somebody who's impersonating or giving you false claims? So, I mean, I wouldn't relate to it from a RTA perspective because we don't deal with the B2C customers at length, but I can answer it from a marketeer's perspective. So keeping a check on what is happening, so we use a lot of tracking tools to make sure that there are some keywords which are being highlighted. And there is tracking tools for the entire social media and the digital channels across. So having those alerts set up will give us time to act on it very instantly. So in my personal experience, what I have seen is people response is the first thing that people look for. If at all there is some sort of an issue, the first thing people would look for is not for a resolution, but for a response. So responding to certain threats or certain phishing emails, so all these things is really important, and having a very tight surveillance and compliance internally. Investing in a very tight technology for surveillance and to have a very transparent compliance systems are really, really important along with technology.
So I would like to add to what Hanisha said is like when a customer comes in, be it a retail or a corporate, it's all about asking questions and relevant questions. For example, if you buy a health insurance policy, we ask your age, are you a teetotaler, are you a smoker, non-smoker, and also with the set of questions, it throws a health score. Now, if I talk about you, it will throw a score of maybe 7. So it's a raising alarm that because questions are repetitive. It's like a psychometric test somewhere, and you somewhere do a mistake, and then to back it up, we have a proposal form, a digital proposal form, and a physical proposal form, where you sign, you declare. Now, in a health insurance policy, if you don't declare that I have diabetes and I have hypertension, it's okay. But when the claim comes in, you are on a bed in a hospital in a room, and the doctor asks you, do you have diabetes? You have to tell the truth. And the crux is telling the truth, building trust, and trust is not from our side, it's from other side as well. Right? So then you say no, then the medication change and you die. Or the chances of you, probability of you, and if you say yes, and so my thing, we believe everybody is honest, but that's not the real world. And that's where we have a backup like proposal forms, a health score, and a digital one, a physical one, and then we have tools, which are used in claims, in underwriting, to ensure that no dirty business comes into us. So these are mechanisms in terms of monitoring checks, which are there to ensure that we stay away. But practically, it may not be possible, but we try our level best.
Thank you, everyone.
So I request, if there are any other questions, you can certainly take that outside the room. Requesting our guests to please stay back for the photograph, the official photograph.
Thank you, everyone.
May I request, as we capture this moment, reflect on the key takeaway from today's discussion in the digital age. Technology may enable scale, but trust remains true foundation of everlasting relationship. Thank you very much for the insightful session. Let's give our moderators and panelists a huge round of applause.